Hello everyone, welcome back to Stock Market Meridian. Today is 23rd July 2026 and you are watching today's post-market report. Let's begin with today's market action. Indian markets remained under pressure today, marking the fourth consecutive session of losses. Similar to the previous session, the market opened with a gap down and remained weak, eventually ending nearly 0.5% lower. But the bigger concern is that the Nifty 50 closed below the crucial psychological level of 24,000. And once again, one of the major reasons behind today's market weakness was the continued spike in crude oil prices. Currently, Brent crude is trading above $92 per barrel, and considering the ongoing geopolitical situation, there remains a possibility of further upside in crude prices. This is becoming a major concern for the Indian economy as well as crude-sensitive sectors. Because of this, crude-sensitive stocks witnessed strong selling pressure today, particularly oil marketing companies, paints, and chemical companies. Coming to sectoral performance, today's top gainers were the media and auto sectors, while the chemical and realty sectors were among the biggest losers. Now coming to the geopolitical update. The conflict between the United States and Iran continues to remain intense. But there is another major development that investors need to watch closely.
The US House has approved a $95 billion budget resolution designed to support military operations in West Asia. The measure passed by a very narrow margin of 216 votes to 214 and will now move to the Senate, where its final path remains uncertain. Out of the proposed $95 billion package, up to $73 billion is reportedly earmarked for additional military and defense funding related to the Iran conflict. The proposal also includes around $12 billion in support for American farmers, while another $10 billion is allocated towards stricter voter identification and proof of citizenship requirements backed by President Trump. More importantly, the blueprint could clear the way for a reconciliation bill, potentially allowing Republicans to pass final spending measures in the Senate with a simple majority. From the market's perspective, a multi-billion-dollar military funding package could indicate that the United States is preparing for the possibility of a prolonged conflict. And if the conflict continues, crude oil prices could remain one of the biggest risks for global markets, particularly for India.
However, if the United States and Iran eventually return to negotiations and move toward a ceasefire or diplomatic solution, sentiment could reverse very quickly. In that scenario, crude oil prices could cool down and equity markets could potentially move back towards their previous highs. So, for now, developments around the US-Iran conflict remain extremely important for the markets. Moving to stock-specific news. Shares of Adani Green Energy declined around 4 to 5% after global brokerage Bernstein maintained its underperformed stance on the stock. Bernstein highlighted that Adani Green is allocating its entire 4 gigawatts of operating and planned merchant generation capacity along with around 10 gigawatt hours of battery storage capacity to sister company Adani Energy Solutions on a fixed tariff basis. According to the brokerage, this structure allows Adani Green to concentrate primarily on project execution. However, Bernstein believes that a meaningful portion of the potential long-term commercial upside could effectively shift toward Adani Energy Solutions, which can sell the power to industrial customers such as data centers.
The brokerage also highlighted another concern. Transmission-related grid curtailment reportedly impacted Adani Green's quarterly EBITDA by around 5% to 7%. Management expects this impact to gradually normalize during the second half of the financial year, as grid augmentation projects and new transmission lines become operational. Adani Green continues to be one of India's major players in renewable capacity expansion, but investors are now closely watching how these internal asset allocation decisions could impact its long-term earnings potential. And there is another very important development related to the Adani Group. The Adani Group is reportedly exploring strategic options to enter India's domestic aviation sector. The group has reportedly expressed formal interest in either launching its own airline or exploring a joint venture to enter the commercial airline business. According to reports, the group sent a letter to the Airports Authority of India in June and is currently awaiting a regulatory response. If approved, reports suggest that the airline business could potentially operate under Adani's defense vertical rather than its airports business, maintaining operational separation. This is important because existing privatization rules restrict major airport operators from owning more than a 10% stake in scheduled airlines, primarily to avoid potential conflicts of interest. So far, the Adani Group has reportedly not officially confirmed these developments.
But if regulations are eventually relaxed to encourage greater competition in India's aviation industry, a potential Adani entry could significantly reshape the competitive landscape. Now, here's a question for you. If Adani enters the airline business, which stocks do you think could benefit and which stocks could face pressure? Share your view in the comments below. Before moving further, if you're new to the channel, don't forget to subscribe. Every morning before the market opens, I upload a detailed pre-market report. And every evening after the market closes, I bring you a complete post-market report. So make sure to subscribe to Stock Market Meridian and press the bell icon so you never miss any important market updates. Now, let's continue. Next, we have an important update from Bharti Airtel. Airtel Africa is planning to list its Airtel Money business on the London Stock Exchange. Airtel Africa CEO Sunil Taldar confirmed that London was selected for the proposed Airtel Money IPO because it provides access to a broad international investor base. The company is targeting the listing of its mobile money business during the second half of 2026, slightly later than initially planned amid war-related energy cost pressures. Airtel Money has grown into one of Africa's largest fintech platforms, serving around 56.5 million active customers. Its annualized total processed transaction value has reportedly crossed $245 billion. At the same time, the group is facing some near-term margin pressure because of rising energy and logistics costs associated with the ongoing geopolitical conflict. Despite these pressures, the parent company reported strong first-quarter top-line growth and profitability, supported by increasing mobile data adoption, digital and AI tools, and favorable currency movements. From an investor perspective, separately listing a fintech platform with more than 56 million customers on a major international stock exchange could potentially unlock significant value for the broader Airtel business. Next, we have an important order update from Suzlon Energy. Suzlon has secured a 201.6 megawatt maiden wind energy order from the Wari Group. The project will be developed in Andhra Pradesh. Under the project, Suzlon will install 64 units of its S144 wind turbine generators, with each turbine having a rated capacity of 3.15 megawatts. The project will be executed under Suzlon's DevCo model. This means Suzlon will handle land acquisition, turbine supply, balance of plant works, commissioning, and lifetime operations and maintenance services. Following this order, Suzlon's cumulative order book in Andhra Pradesh is approaching 1 gigawatt. Importantly, this is also Suzlon's second consecutive DevCo-led EPC order within a single week, indicating growing customer interest in end-to-end project execution models.
Next, we have an important clarification from Oracle Financial Services Software, or OFSS. During today's session, several media reports suggested that parent company Oracle Corporation could potentially sell a portion of its stake in OFSS. These reports contributed to significant movement in the stock. However, by the end of the day, OFSS issued an official clarification. The company stated that it has no knowledge of any such development regarding a potential stake sale. OFSS also clarified that, contrary to some media claims, it had not received any formal media queries through its official investor relations email address. The company also reminded investors that it announced its Q1 FY27 financial results on July 22, 2026. Alongside the results, CFO Avadhut Ketkar was elevated to the position of Managing Director and CEO, following the resignation of long-serving CEO Makrand Padalkar. So, for now, investors should differentiate between market speculation and officially confirmed information regarding any potential stake sale. Now, let's look at some of the major companies that announced their quarterly results today. First, we have Cipla. Cipla posted a relatively weak set of quarterly numbers.
Revenue, net profit, EBITDA, and margins all improved on a quarter-on-quarter basis. However, these major parameters declined on a year-on-year basis. Profitability contracted year-on-year, primarily because of a high base in the corresponding quarter last year, along with increased manufacturing and employee expenses. So, despite sequential improvement, the year-on-year numbers indicate some underlying pressure. Yesterday, we saw disappointing numbers from Dr. Reddy's laboratories. And today, Cipla also delivered results that may leave pharmaceutical sector investors cautious. Next, we have PVR Inox. PVR Inox posted a robust set of quarterly results. The major earnings parameters improved on both a year-on-year and quarter-on-quarter basis. Overall, the numbers indicate healthy improvement in the company's operating performance. Next, Ujjivan Small Finance Bank also posted a good set of quarterly results.
Revenue, net interest income, and margins improved. Gross non-performing assets remained broadly flat. However, the more encouraging development was that net non-performing assets declined noticeably on both a year-on-year and quarter-on-quarter basis. That indicates improvement in underlying asset quality. Overall, the numbers look positive for Ujjivan Small Finance Bank.
And finally, we have Vishal Mega Mart. Revenue, EBITDA, net profit and margins improved on both a year-on-year and quarter-on-quarter basis, with the exception of the year-on-year EBITDA margin which remained broadly flat. Overall, Vishal Mega Mart delivered a good set of quarterly numbers. So that's all for today's post-market report. The key concern for the market continues to be rising crude oil prices and the ongoing US-Iran conflict. With Brent crude trading above $92 per barrel and the Nifty closing below the crucial 24,000 level, these developments will remain extremely important going into the next trading session. I'll see you again tomorrow morning with another detailed pre-market report before the market opens. Until then, thank you for watching Stock Market Meridian. Signing off, Jai Hind.